The world of AI and AI investing is evolving at a breakneck speed. In just the past 2 weeks, we've seen groundbreaking developments that could reshape the entire industry. From OpenAI's staggering $100 billion valuation talks to Midjourney's surprise hardware venture, the AI landscape is shifting faster than ever. In today's video, we're going to dive into the latest funding rounds, the tech advancements, and the potential market impacts that every investor needs to know. My faithful golden retriever Winston has helped me sniff out some truly fascinating developments. So stick around because the future of AI is unfolding right before our eyes. Now let's dive into our first breakthrough, Google's Game Engine AI. As an old banker, my gaming days are long behind me, but this development has caught my attention for good reasons. Google's researchers have created an AI model that can generate real-time gameplay for the classic game Doom without using a traditional gaming engine. They're calling it the first game engine powered entirely by a neural model. Imagine if we could predict the stock market movements with the same accuracy and speed that this AI predicts the next frame in a video game. That's essentially what Game Engine is doing. It's generating new content in real time based on previous inputs and actions. The system uses a neural network to simulate Doom, you might remember that first-person shooter, at over 20 frames a second on a single chip. Now, I'm far from an AI expert, but let me try to explain based on my understanding. The AI was trained in 2 phases. First, it learned to play Doom through reinforcement learning, much like how a trader might learn from their successes and failures in the market. Then it was trained to predict the next frame based on previous frames and actions, similar to how we might try to predict market movements based on historic data and current events. The results, well, they're really impressive. Impressive enough that human raters had difficulty distinguishing short clips of the game engine output from the real Doom gameplay. It's like trying to tell the difference between a seasoned trader and a highly sophisticated trading algorithm. The lines are starting to blur. But what does it mean for the gaming industry and for investing? Well, it could be as disruptive as high-frequency trading was to traditional stock trading. We're looking at the potential for games where environments, narratives, and mechanics dynamically evolve based on player actions. It's like having a market that adapts in real time to trader behavior, which is exactly what we have. Now, of course, there's some challenges here. The current version still requires human gameplay data for training, and running at 20 frames per second is impressive, but below modern gaming standards. It's a bit like an early algorithmic trading system. But looking ahead, this technology could lead to more adaptive and intelligent gaming experiences, but more importantly, it demonstrates the potential for neural networks to generate really complex, interactive environments in real time. And that, my friend, has implications far beyond gaming. Think virtual reality, autonomous vehicles, even smart cities. Now, while I may not be rushing out to buy a gaming console anytime soon, I'll certainly be keeping an eye on this technology and how it develops. After all, in the world of finance and technology, today's game changer could be tomorrow's industry standard. All right, let's shift gears a little bit here to something maybe a touch closer to myself. AI in communication and customer services. This is a field that's seeing some truly remarkable advancements, and it's one that could have far-reaching implications for businesses and therefore stocks and consumers alike. Let's start with a company that's making big waves in this space. It's called bland.ai. Now, don't let the name fool you. There's nothing bland about what they're doing. This San Francisco-based startup has recently raised a whopping $20 million in funding, including a $60 million Series A round led by Scale Venture Partners, if that means anything to you. But what's got investors so excited? Well, they're developing a platform that can automate phone calls using AI-powered agents. These aren't your run-of-the-mill chatbots. These AI agents can speak in any language or voice, handle millions of calls simultaneously, and operate 24/7 without the hallucination issues that have plagued some other AI systems. Now, I know you're thinking, Felix, this sounds like it could put a lot of people out of work, and you're not wrong. But let's look at the bigger picture. This technology isn't just about replacing human workers, it's about augmenting and enhancing customer service capabilities. And yeah, I'm not going to lie to you, a lot of people are going to lose their jobs. A lot of unskilled jobs particularly are going to just disappear. If you do a repeat task at work, you should be a little bit worried, and you better build up an extra income stream that isn't going to get replaced by AI. But just look back at Bland's AI system here. It can be customized for sales, for follow-up customer support, for all sorts of stuff. It can be integrated with your existing CRM system. And this is therefore very, very powerful. And it could make sales-driven businesses very, very, very much more cost-effective. Think about all the support costs. Like if you ever talk to your broker, for example, who do you talk to? Some lovely person in India or in the Philippines or something, most likely. Well, yeah, that outsourcing could be done even cheaper with AI. So costs come down, margins improve, profits improve, stocks improve. So there are some potential benefits here too, like in the real world for consumers. Imagine never having to wait on hold again, being able to get to customer support at any time of the day or night. It's like having a personal concierge at your beck and call, ready to assist you with anything from booking a flight to troubleshooting whatever it is that is troubling you. It reminds me a bit of how online banking transformed the financial industry, making services more accessible and convenient for customers while also reducing costs for banks, right? When was the last time you went to a bank? I actually can't remember. I do everything online. Now let's turn our attention to some really fascinating developments. And some of these are coming out of China, specifically from the EV manufacturer XPeng. They're gearing up to unveil their second generation humanoid robot at the upcoming Tech Day in October. And this new robot is said to be a significant leap forward from their first generation product, which was introduced a year ago. What's particularly interesting is here, XPeng is blurring the lines between automotive and robotic technology. They've incorporated the end-to-end autonomous driving system into the robot, potentially giving it advanced navigation and decision-making capabilities. And they've developed an AI chip called the Turing chip, which was completed just last month. And it's designed for simultaneous use in AI cars, robots, and even flying cars, which they're also building, which is rather cool. And they claim it has 3 times the power of current chips. Now, these advancements are impressive, and I wish them all the best. But as an investor, what I understand better is just the US market. So I still believe Tesla has the edge in this arena. Why? Well, for starters, they've been working on their Dojo supercomputer and custom chips for years. They have a significant head start in integrating AI with both automotive and robotic applications. And they have vast amounts of real-world data from its fleet of Teslas, giving it a unique advantage in training AI systems. This data is crucial for developing this robust AI model that can handle the real world. But as we look into the future, it's becoming more and more clear that the integration of AI, robotics, and automotive technologies will continue to accelerate. And I believe that companies like Tesla, with their established infrastructure, data advantages, and fewer US regulatory hurdles than an overseas company, are still in a stronger position, at least for US shareholder returns. Now let's shift our focus to a company that's been making headlines recently for its groundbreaking AI technology and rather eye-watering valuation, OpenAI. OpenAI, the company behind ChatGPT, is currently in talks for a new funding round that would value the company at over $100 billion. That's just a big number. It's a staggering leap. We're talking about a 20 billion jump in valuation in just 8 months. To put that into perspective, that's like watching a stock you bought skyrocket by 25% in less than a year. This funding round isn't just notable for its size, it's also attracting some of the biggest names in tech. Thrive Capital is leading the charge, which plans to invest around $1 billion. But they're not alone. Microsoft, already a major backer, is expected to deepen its commitment. And Apple and Nvidia, both in talks to join the funding round. Now, why is this significant? Well, if these talks materialize, it would mean the world's 3 largest companies by market cap are all investing in OpenAI. That's not just a vote of confidence, it's a resounding endorsement of OpenAI's potential to shape the future of AI. Apple's potential investment underscores its commitment to ensuring access to cutting-edge AI technology. And Nvidia, the world's biggest chip maker, is reportedly discussing an investment of about $100 million. Maybe not that much money for them, but it's a clear sign that the giants of tech see AI as the next big frontier and it's here to stay. But what does it mean for OpenAI and the broader AI landscape? Well, for starters, it's a clear indication of the growing importance and potential of AI in the tech industry. This massive valuation reflects strong investor confidence in future prospects for OpenAI and the broader market. OpenAI's rapid growth is evident in its user base as well. Reports indicate that it has now over 200 million weekly active users. That's double the count from last autumn. And it's not just individual users. 92% of Fortune 500 companies are reportedly using OpenAI's products. That's a level of market penetration that most companies can only dream of. So this funding round, if successful, would solidify OpenAI's position as a leading force in the AI industry. It provides the company with substantial resources to continue R&D and accelerate the pace of innovation. Now, whether you're an investor, a tech enthusiast, or just someone curious about the future, the AI space is definitely one to watch. And the next big breakthrough could be just around the corner. Let's take a moment to consider the broader market impact of these AI developments we've been discussing. The implications are far-reaching and it could reshape literally everything. First and foremost, we're seeing a surge in investor interest in these AI-focused companies. OpenAI's potential $100 billion valuation isn't just a win for them, it's setting a new benchmark for the entire AI sector. This could lead to a ripple effect, driving up valuations for other AI companies, whether listed or whether they're still startups. But it's not just about the AI companies themselves. We're also seeing traditional tech giants like Microsoft, Apple, and NVIDIA doubling down on the AI investments. And that suggests that AI is becoming a core focus for these companies, which could significantly impact their future growth and stock performance. So what does it mean to your investment portfolio? First, Microsoft has been making significant strides in AI, particularly through its partnership with OpenAI. The integration of ChatGPT into Bing and other products like the Copilot for Office could give them a competitive edge in search and the productivity software markets. With their strong cloud infrastructure and enterprise customer base, because that's where Microsoft is really strong, Microsoft is incredibly well positioned to monetize AI advancements. And this makes Microsoft a potentially attractive long-term investment for those looking to capitalize on the AI boom. Now, it also means that we need to watch just how well Microsoft is capitalizing on it. How are they monetizing it? Because they are kind of the leader here with that direct access, and they have probably the best sales team in the world for software. So if these guys can monetize it, bingo. But if they can't, then that's obviously also a massive risk. Now, Apple, while traditionally more secretive about its AI efforts, is showing increased interest in this field. Their potential investment in OpenAI and ongoing work on on-device AI for privacy could lead to innovative features in future iPhones and other products. However, Apple's AI strategy is less clear compared to its peers, making it a more speculative AI play. Investors might want to watch for more concrete and AI announcements from Apple before making a decision on the stock. And NVIDIA is perhaps the most direct way to invest in the AI revolution. As the leading manufacturer of GPUs, crucial for AI training and inference, NVIDIA stands to benefit from increased AI adoption across all industries. And the recent stock performance reflects this potential. However, the high expectations built into the NVIDIA stock means that any setback could lead to some significant, volatility, polite way of putting it. So for investors with a high risk tolerance and a strong belief in AI's future, I think NVIDIA could still be an attractive option. Do bear in mind, though, what I mentioned about what Apple is doing, putting the chips in the devices. Right? And that's not really NVIDIA's strength. That's more the strength of companies like ARM and newer startups. So there could be some competition here where a lot of the day-to-day AI usage, at least from a retail basis, happens now on your device because it's maybe safer from a privacy point of view. Maybe it's also faster because you don't have to wait for the data to go in and out. Next, we move on to Google, or more precisely its parent company, Alphabet, which is another strong contender in the AI space. They have a vast amount of data. They have really, really good researchers, and they have this AI-first approach. Google is well positioned, in my humble opinion, to leverage AI across all of its products. The recent breakthrough with this game engine AI showcases their innovative capabilities, and that's why I mentioned that at the top. However, they do face more competition in their core advertising business and also regulatory challenges could impact its AI efforts. There is some rumors around the US might try to split up Google. I personally think they'll fail because they tried to do the same thing with Microsoft, 20 years ago? But it's still something that could distract Google for some period of time. It's worth noting that investing in individual stocks carries higher risks than a diversified option like AI-focused ETFs. So for those looking for a broader exposure to the AI trend, ETFs that track AI and robotics companies might be worth considering. In the customer service sector, companies like bland.ai are poised to transform how businesses interact with their customers. And this could lead to significant cost savings for companies across lots of industries, potentially boosting the bottom line. Now, it's also going to lead to a lot of job displacements, particularly in traditional call centers, in trucking, and sectors where a lot of people are working. And we might see it with robots in factories. So policymakers are going to have a think about how we deal with that and how we retrain people and actually give them something meaningful to do that is satisfying. The automotive industry is another sector that's likely to see significant impact with companies like XPeng and Tesla here pushing the boundaries of AI in vehicles. We could see a shift in market share towards companies that can best integrate AI into their products. And that could really reshape the competitive landscape. And you might see some of the old guard simply go out of business unless governments keep propping them up. And then on a macro level, the economy, the rapid advancement of AI could lead to higher productivity across lots of sectors. And that could drive more economic growth. But it also, of course, creates that unemployment issue as we need to figure out what we do with all the people who are working in these relatively unskilled jobs. We're also likely to see increased regulatory scrutiny as AI becomes more pervasive and more smart. And that could lead to more compliance costs for these companies, but it could also create opportunities for specializing in AI governance. Yeah, there'll be a whole new industry, just like the internet created the firewall and, CrowdStrike and Fortinet and these kind of things. Cloud companies did that too. We're going to see a whole different industry pop up here. So I'd watch out for that space because that could be the shovel business that could make the most money. In conclusion, the reason I'm sharing this news is because I want to emphasize that the AI revolution isn't just about a tech shift. It's a market-wide transformation that could reshape all investment strategies, business models, and even entire economies. And as an investor, staying informed about what's happening here isn't just interesting. I think it's crucial for navigating and making better decisions for the markets of tomorrow. If you want to stay up to date with little bits of AI news that actually give us an insight into what's possible for the future, let me know in the comments below and we'll make more videos like this. If you absolutely hated this, also let me know. I do genuinely want to know. And remember, whether you're investing in AI companies or using AI to inform your investment decisions, knowledge is power. So stay curious, stay informed, learn, improve your skills, and you will come out brilliantly from this transformation, this revolution that we're currently going through. I thank you for joining me on this little journey. And until next time, this is Felix and Winston, and happy investing. Just when we thought PayPal couldn't get any more interesting, they dropped another bombshell. Felix here, and today we're diving deep into PayPal's latest deal that could reshape the fintech landscape. Buckle up because this new deal is more significant than it might appear at first sight.